JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 22nd of May 2020, so yep, welcome everyone. Welcome to this Friday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, as always, just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So I believe you can find something useful here for yourselves, guys. Now then, quick update here. So the situation continues to, kind of go worse and worse. Well, I wouldn't probably even say go worse and worse, but it's still, the total amount of infections continues to rise, the total amount of deaths continues to rise. So if we look at the daily case here, I mean, we had a huge spike yesterday. So one of the most kind of we had previously, so according to this graph. So so yeah, not everything is looking quite good here. So of course the US is leading the way in that front in terms of the infections. Russia is in second place, and Brazil is catching up rapidly as well. However, in terms of the total amount of deaths, US is in first place, and UK is in second. So I mean, we'll continue monitoring this situation here, and we'll see what's happening here. However, it's not really looking good, I would say. Now then, jumping into a few indices very quickly here. So the first one I want to touch on here is the German DAX. Yesterday the index kind of closed virtually unchanged, and to be honest, or actually, I do apologize, looking at this daily candle, the body candle, it closed virtually unchanged. However, it stayed in the negative zone, so it closed in the red. However, it remained above this barrier, the one that I was talking about, the 10,986 zone, marked by the high of the 11th of May, and yep, at the same time it kind of remained below this barrier, the one that I keep talking about, a break of which we need in order to aim for higher levels. Now, looking at the cash index right now and where it's trading at the moment, we can see that it's currently balancing at around 10,920 zone, so basically below this level. So basically what we're going to have here is a nice opening gap to the downside, and in a way this kind of makes us a little bit worried, I would say, and we could see this one drifting maybe a little bit further south towards the 21-day EMA. We're going to target that initially, 21-day EMA here, shown as the yellow line. So we'll keep an eye on that one. If we get a test of it, then we want to see if it actually will do the trick here, as it did, for example, back in the around mid-April and the end of April, where it provided decent support. So that's why, guys, for now, given that the price is already below the 10,986 zone, we could go for a bit of a decline here. However, don't get me wrong, we're still within this wide range here, roughly between the 10,280 zone and the 11,236. So in a way, as long as it kind of as long as it stays inside this range, there is well, overall we will remain neutral. However, we'll try to kind of aim for some levels here within the range. So, and as I said, for now our target is around the 21-day EMA here, and then we'll take it from there. Gold. So gold yesterday closed below this upside support line. It broke it. However, it failed to stay below this level, the one that I was talking about yesterday, the 17.1723 territory. You can see that we did get an overshoot. However, the price still kind of ended up above it. Today, this morning, we are seeing a push further north. However, to be honest, this move north is kind of still, as a for now, it's considered as a little correction. And before another possible leg of selling. However, we will probably take a bit of a neutral stand on this one, because on one hand, this level here in the 1723 level zone is acting as a very good area of support. So we have to accept this, and but of course, if it gets broken and we see a daily close below this, then yep, it increases the chances of a potential further move lower. In a way, how we could look at it today is, even if we see a drop below the straight away without even waiting for any closes, if we see a drop below the 1723 territory, then yes, we will carefully aim for lower levels. Don't get me wrong, we do have the 21-day EMA here, which could provide a bit of support, so that's why it could be a little bit tricky here. But if that gets broken, then yep, slightly lower levels could be met. Maybe we could aim for the psychological 1700 level, or the 1681-80 zone, roughly around here. Because the reason why we're going to be keeping a close eye on this 21-day EMA, because as you can see previously, it acted as sometimes it did act as a good area of support. So let's not exclude this possibility of happening again. So that's why if we get a drop below the 1723 territory, yes, we will aim for lower levels. However, we'll be very careful near the 21-day EMA. But if that gets broken, then, well, I mean, lower levels could be met. In terms of the upside, to get a little bit more comfortable with higher levels, we need to see a push above the 1748 territory, and then we will aim for higher levels again. Silver. So silver is kind of working out nicely. So for now, everything's kind of working according to plan. So it is drifting lower, which this move lower will be still classed as a temporary correction. So because we are still above this upside support line taken from the low of the 18th of March, and in a way this could drift lower, could test this area, because this is where we were going to be very careful near the 16.39 zone, which is the lowest point of February, and also could coincide by the time probably this commodity could drift lower. This level could coincide with the 200-day EMA, or in other words, the 200-day EMA could coincide with this 16.39 level. So that's why for now we are leaning a little bit more to the downside. Of course, we will be very careful, because don't get me wrong, we've seen something like this happening where it drifts lower, doesn't really actually reach this upside line, let's say any upside lines, and kind of reverses earlier and pushes higher. For that, we have this barrier and 17.60. So for those who are more on the cautious side, you could just wait for a push above the 17.60 territory, because a break above it would confirm a forthcoming higher high, and the next target for us would be the highest point of this year so far, I would say, 18.94 territory, which is marked by the also by the highest point of February. So yep, keep your eyes on that one. In terms of the downside, if this upside line breaks and the price falls below the 15.84 territory here, then we could consider a bit of declines here. So yep, that's why, guys, for now, keep your eyes on this one. We'll see how all this is going to evolve today, but for now, this move lower could still be seen as a temporary correction before another leg of buying. Brent oil, quick update here. So this is what I talked about yesterday, basically. So I was telling you guys to keep a close eye on this downside line taken from the high of the 8th of January, and as you can see, we have this line acted as a fantastic area of resistance, and today we're seeing a bit of a decline here. However, for us to maybe examine lower levels, we would like to see a drop below the 32.21 zone. I've mentioned this level yesterday, if we do get a drop below this, then maybe we could also get a drop below the 21-day EMA, and if so, this could kind of enhance the idea of a potential kind of deeper move lower. However, if this area here, the 32.21 zone, provides support, or even let's say this even 21-day EMA provides support, then be very careful, because we could see this one reversing back to the upside here, and if it travels again to the downside line here, well, I mean, maybe this time it could have that chance to break it, and if so, then actually we would probably not even wait until this climbs above the 39.60 level that I've mentioned yesterday. We would already probably aim for higher levels if we would get a push above the 36.10 territory here, because if we climb above that level, this would already kind of be above the price would already be above this downside line, and maybe more buyers could see this as a good opportunity to step in. So that's why guys, for now, we will be very careful here, and probably will take a bit of a neutral stand for now, because we want to see which of the levels will get broken first. Ethereum. I looked at this one yesterday as well, and I was telling you guys that this kind of this crypto continues to kind of yes, it was moving higher. However, it struggled to move above this upside support line, and this kind of this is what worried me a little bit. And as you can see, the kind of this was true. The kind of it was I was correct in a way correct to worry a little bit here, because as you can see, we have seen a slide here back towards this level here, towards the 191.30 zone, and that was the low. That is the low of the 15th of May, and yesterday we managed to hit that level perfectly, from which the crypto rebounded, and now it's sitting below the 21-day EMA. Now, don't get me wrong, for now, if we get a drop below this 191.30 level, this kind of could increase the chances of a potential drift lower. However, don't forget that we do have these below, slightly below that, we do have these 100 EMA and the 200 EMA on the daily chart, so which could in a way provide support as well, because both of them are very close to each other, and we basically don't want to see a scenario like here, for example, where it kind of will provide support, and then we'll see a nice rebound again. So if it drops below the 191.30, we would actually prefer to see this one drifting, let's say, lower, maybe a little bit to the downside here, towards the low of the 11th of May, or in other words, the current lowest point of May. But if that fails, then well, slightly lower levels could be met here again. But again, for now, guys, be very careful. Even the way you could take this one carefully and cautiously is wait for a push above the April high, which is around the 227.50 zone, and then yep, we could aim for higher levels, because this would confirm a forthcoming higher high, and yep, maybe more buyers could join in. Now then, AUDNZD. So jumping into a few pairs. Now, I talked about this one yesterday, and was telling you guys to keep a close eye on this one. Now, we got the New Zealand retail sales this morning, so which came out, well, to be honest, the core retail sales Q on Q came out better than the previous one, but the headline retail sales kind of came out as a little bit of a disappointment. However, as you can see, Australian dollar is kind of losing ground right now, to be honest, and against the New Zealand dollar in this case, and it's now breaking this upside support line. So the idea that I was talking about yesterday, where basically one half of the idea was already accomplished, the correction, and then we were waiting for the other part, the second half of the idea kind of to work out here, where we could see this one pushing higher. However, that didn't quite really happen, and as you can see now, this upside line is getting violated, and the rate is already below this 1.07 territory. So I talked about this one, and but what I was mentioning yesterday was that we would like to see a daily close, because yes, we are drifting right now below this. We are in an early or European morning, and to be honest, I mean, let's wait and see what's going to happen here today. And if we do see a nice daily close below this level, below this 1.07 territory, then it kind of increases the chances of a potential drift lower going into next week, where we could then aim for the 1.0585 level. That's going to be our first initial target, and after that we'll take it from there. If by any chance this pair suddenly pops back above this upside line and pushes above this barrier right here, the 1.0757 zone, then yep, the upside could be back on the table, and yep, we will consider slightly higher levels. GBPUSD. Now, in terms of data, today we had already the retail sales that came out from UK. So those came out as a disappointment, even not to mention, of course, as the disappointment in relation to the previous figures, but also to the forecasts. So so yeah, check out those figures on the economic calendar, guys. But yeah, it's not, the figures are not really looking good, and but there is not much reaction here on the GBPUSD pair, and the thing is that previously when I talked about this one, I was telling you guys to keep a close eye on this little territory here, the highlighted area. And as you can see, for example, this week on Tuesday, we've pushed above this barrier, above this 1.2245 territory, which previously I was looking at as a good area of support. Now, as you can see, it acted as a good area of resistance. Let me just clear up this chart a little bit. Let me remove this highlighted area, and also actually let me remove this level here, the 1.2163 territory, which is the low of the 7th of April. And as you can see, it kind of got violated, but the more important level here right now is this 1.2245. So in a way, for now, how we could play this one out is we'll keep an eye on some of these levels. We'll keep an eye, of course, on the 1.2245 zone. If by any chance we get a push back up here, we would, in order to aim for slightly higher levels in the short run, we would like to see maybe a push above the current high of this week, which is around the 1.2296 zone, and that's marked by Tuesday's high. So that's 1.2296 territory. A push above that could also place the rate above the 21-day EMA. So maybe more buyers could see this as a good opportunity to step in and maybe drive this one back towards this key area of resistance near the 1.2650. However, with the downside, to be honest, yes, there is still a chance for this one to drift lower. However, now looking at this picture, we would prefer to see a drop below the current lowest point of this week, near the 1.2077 zone, and then target lower levels, because until then, to be honest, this could drift a little bit lower. It could fail to move towards this 1.2077 territory and then reverse earlier and push higher. So we've seen something like that happening before, so that's why we would prefer to wait for a drop below the 1.2077 zone in order to aim for lower levels. US dollar against the Canadian dollar. Now, keep an eye on the retail sales figures from Canada today, later on. But looking at this picture for now, everything's kind of working out according to what I was talking about previously, where I was telling you guys to keep a close eye on this possible kind of descending triangle here. And as you can see, the lower side of it once again held the rate from moving lower this week. That happened on Wednesday, as you can see, and now the rate is pushing back towards that psychological 140 zone, which kind of also coincides with the 21-day EMA. This is where currently the rate is getting a hold up. If it pushes higher but still fails, let's say, to move above this downside line, then, well, I mean, we could see another round of selling, and it could drift back down towards the lower side of this pattern. However, for now, given that it's kind of coiling up, I would say even it's getting into a bit of a squeeze here, we will probably take a bit of a neutral stand, because preferably we would like to see a push above this downside line, and now we can actually push this level a little bit lower, and a push above this high, the high of 14th of May, could do the trick for maybe for more buyers. So the 1.4141 level could maybe attract more buying interest. However, again, we need to see a break of this downside line first. US dollar against the South African rand. Now this is working out perfectly to what I was talking about yesterday and the day before, actually yesterday. So basically broke this pattern, this nice symmetrical triangle, and yep, it drifted lower. It broke below this level that I was talking about, the 18.16 territory, and kind of yep, it continued to move lower, and it seems to be willing to do so as well. If this pair, for example, stays below the stays below the 17.8430 territory, roughly around here, which is the low of the 9th of April, then we could see another round of selling, potentially bringing this pair towards the 17.1730 mark, roughly around there, and that's the low of the 25th of March. So basically, let me just quickly draw an arrow here, and I'll show you what's yeah, this is the potential idea for now. So yeah, guys, keep your eyes on the 17.8430 zone, roughly around here. If this continues to kind of act as a good area of resistance, then yep, we could see another round of selling. Jumping into Euro Aussie very quickly, as you can see, I looked at this one a while ago, and basically I was telling you guys to keep a close eye on this kind of highlighted area here, this support zone between roughly between the 1.6540 and the 1.6597, roughly around there, and basically what I was saying, that if this area continues to provide decent support, as it did here, for example, in the end of April and the beginning of May, then maybe the bulls still have a chance to push this one up again. That said, we would like to see at least a push back above this this barrier here, the high of the 15th of May, which is roughly around the 1.6893 territory. And if we do get a push like that, then this would also place the rate above the not to mention the 21-day EMA, but also the 100 EMA, 100-day EMA. And yep, maybe more buyers could see this as a good opportunity to step in. So for now, wait, guys, we rather wait, and we'll wait for a clear break through one of these highlighted areas, and then kind of consider a further directional move. But again, if by any chance this suddenly reverses lower and drifts below the 1.6540 territory, then, well, I mean, this would confirm a forthcoming lower low, and well, in a way, it could open the door towards a decline towards the lowest point of February, and yep, which is around the 1.6086 zone. So yep, keep your eyes on that one, guys. And finally, euro dollar. Now this one, as you can see, yesterday it tried to climb above this 1.0990 level, and it did managed to do so. However, as you can see, it still ended the day in the red, and it drifted lower, and well, right now we are seeing a bit of a decline here. So in a way we can say that the pair is not ready. It seems like it's not ready to exit the range here. So for now, overall we will remain neutral, but if it starts dropping, let's say below the 1.0875 level again, then maybe we could actually consider a possible move towards the lower bound. So this is from the short-term perspective. So we could consider a possible move towards the lower side of the range, which is around the 1.0777 level, and then yep, of course we'll take it from there. But for now, we'll probably take a little bit of a neutral stand here and wait for the next move. So in a way, as I said, in order to, let's say, consider maybe a move towards the lower side of the range, we would like to see a drop below the 1.0875 territory. But in terms of the upside, well, we'll still stick to the same idea. We would prefer to wait for a push above the 1.0990 level, roughly around there, and then we could aim for higher levels. So guys, I really hope you found it useful, and thank you very much for watching and listening. Thank you for sticking around, and I really appreciate your time. If you want to catch my video later on, my trader's tea time, as always, 13:15 GMT. But for now, guys, I hope you have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.